Hi, I'm Ross O'Brien with the Economist Corporate Network in Hong Kong. We've just wrapped up our annual Asian Business Outlook Survey meeting, in which we've asked Economist Corporate Network members from around the region to give us their views on their strategic priorities in 2012. And the man responsible for Telstra's strategic priorities in 2012 offshore is John Plas. Thank you very much for being with us, and thanks for your comments today on the panel discussion. I wanted to pick up on something that we spoke about, which was with regards to a finding in particular on attitudes towards merger and acquisitions. While largely most of our respondents believed that both last year and this were going to be good hunting years for acquisitions, a fairly large chunk, perhaps a quarter or so of respondents, actually didn't even have M&A on the table as a strategic option. And you found that surprising.
I did find it surprising. On the surface, I thought it's always an option that managers should always be thinking about. Inorganic activity to grow organically in Asia is quite a task, and you would want to augment that as best as possible with inorganic opportunities. Maybe they took M&A in a very black and white sense in the definition. Maybe we look at M&A beyond just a pure transaction. It's actually partnerships. And so where we tend to spend a lot of our time is actually identifying and qualifying the local partners, understanding the local markets. They're all very disparate and very different. Possibly they're not taking into consideration all the partnership opportunities that you really have to commit to and spend time evolving.
Right. Now, turning a little bit to your wheelhouse, information and communication technologies, we found that there was a fairly significant increase in respondents' willingness to adopt new technologies in the coming year, specifically around cloud computing. That was an interesting finding. But from what you were saying, you didn't. You found that as being very, very in line with global trends, and certainly from your own client's perspective, that is the outlook. The global outlook is cloudy in that sense.
It's cloudy. Cloud has a very broad definition depending on who's thinking about it. We definitely are seeing cloud being used by our customers in the region for almost different reasons than they're being used in more Western markets.
Right.
In Western markets, they're really trying to stop the spending on hardware, reduce labor costs, very high labor costs. In Asia, labor is very low. CapEx is definitely funded towards growth. It's real estate and power that are the number two cost elements that cloud can effectively displace the CapEx and the real estate costs of data centers.
Right.
And cloud can fortunately affect that. And so we're definitely seeing cloud as an enabler of trying to repurpose dollars into more front-of-house opportunities. So if a CIO can take a cloud opportunity and repurpose his CapEx into customer relationship management software, they'll do that.
Right. And could there also be a link to the other findings around an increased awareness or a rethink of business continuity and disaster recovery strategies? That was something also that popped up on the radar screen. Do you see those trends linked at all?
We definitely do. Cloud is going to effectively create a virtual business continuity disaster recovery opportunity. We certainly experienced through our own customer base, and in the carrier segment particularly, who needed connectivity after the Japan earthquake.
Right.
We, fortunately, within 3 days, were effectively back up and running completely because we were able to redirect traffic over a very diverse cable network.
Right.
A number of carriers contacted us in order to facilitate their connectivity back to North America. You can see it now that there is more of a dusting off, I think you called it, of the business continuity disaster recovery strategy. We're seeing it in banks in Japan who are now looking for data center and business continuity footprint outside of the greater Tokyo area, and even expanding into Western Japan and offshore.
And finally, and very briefly, one of the things that you wrapped up on was a very interesting point about how Asia in its trading within itself may present the greatest opportunity in the years ahead for multinational firms.
Yes. At Telstra, we monitor very closely where our communication flows are going. And in the past, the legacy has been into Asia requirements of our customers and out of Asia requirements for our customers. We're seeing more and more that balance shift to intra-Asia flows of communication, and we know that those communication flows follow trade flows.
Right.
And so it's quite indicative that trade amongst the countries in Asia is potentially an opportunity for MNCs to augment their revenue mix when things are going to be probably quite challenging in the other more established Western markets in the next couple of years.
Excellent. I'm here joined by Jeremy Andrulis, who's the general manager of AonHewitt's activities in Hong Kong and Taiwan. Thanks for joining us, Jeremy.
Thanks, Chris.
I'm very curious to probe once again your thoughts on the survey findings in which our members said that turnover in markets like China and India was under 15%, 14-ish% in China on an annual basis, less than 12% in India. You were quite amazed at those. You thought they were way too low.
Well, yeah, I think from our findings, we see the employee turnover in China. Again, it depends by industry, but the average is closer to the high teens and low 20%.
Okay.
With spikes in retail and FMCG or hotels creeping up to the high 30s%. Right. So I think it reflects maybe the stature of the companies that responded.
Okay.
Very well-established companies that are managing their turnover quite well.
Right, right. And to that note, when we did ask them what they were using as retention strategies, it quite skewed towards the soft side of the house. There were a lot of communication-centric strategies around building relationship between employees and employers, and indeed direct reports. And to you, that's a key part of the equation.
Well, I think yes. I think what organizations have learned over the years is that these short-term tactical types of actions, retention bonuses, are not going to last. They may keep someone along for 3 months,
right,
but the same pervasive issues around not having a good relationship with the manager or understanding the career opportunities that are available,
right,
they still exist. So I think the companies that do this well are companies that actually invest in programs to develop their managers as effective people managers. It takes a holistic approach. So if an individual has a concern around their career, that manager knows about that,
right,
and they know what levers to pull. If it is a short-term or a pay issue that's a concern, they can deal with that issue.
Right.
Or if it's something around accountability or empowerment, they want more ownership. The manager knows about that because it is that tight and close relationship between manager and employee that is really the one overarching type of strategic initiatives organizations can take to address, not necessarily solve, but help to mitigate some of the retention issues.
Right, and presumably those if you're a manager in a firm that's oriented around those issues,
yeah,
that doesn't necessarily change when the economic outlook changes. So, for instance, our survey responses tended to suggest that members think that 2012 will be less high growth than last year, but that's not going to affect the way they interact or deal with their people, is it?
No, absolutely not. I think you take, again, looking at Asia specifically, that longer term investment, recognizing the fact that the success of any business long term is having this pipeline of talent that is actually going to be able to sustain the business,
right,
to the revenue estimates that the home headquarters are looking for in Asia.
Right.
It's a multinational. So I think it is that longer term horizon, continue to invest in first line managers as well as the leadership, make sure that they can grow the business.
And what do you take away from the finding that a large number of our respondents have fairly diversified and dispersed senior management teams throughout the region? It seems that the age of the regional headquarters is done.
Yeah, I think you see that very specifically. The leading industries around retail or FMCG, where they have to be close to the customer, understand the buying behaviors of maybe different in China or even North China versus South China, or in India to Southeast Asia. You're seeing this fragmentation or different centers or locations for the senior leadership.
Right.
Sometimes it's setting up regional headquarters, two spots within Asia, or sometimes, as you mentioned, it's moving senior or even global resources to epicenters in Asia, Shanghai or Singapore or Hong Kong.
Yes, I was very surprised that a large number of our respondents have their global head of sales in Asia. I could only attribute that to being the fact that demographics supports having a global head of sales in the world's largest collection of markets. And finally, and briefly, as you look out into 2012, and bearing in mind your philosophy of the long view, where do you think global firms are going to be positioning themselves for growth in Asia Pacific, either from a market perspective or just in broader strategic terms?
Well, I think the investments will continue. I think organizations, again, are taking this longer term, the 2020 view. What is our organization going to look like? What are the capabilities that are required for that? Where do we have global resources that are physically in Asia to manage the business from here? I think, and they're recognizing that development of people is not short term. It takes a long horizon to have local pipeline of next generation of general managers. It takes investments now. But I think while that was a story, I guess 2, 3, and 5 years ago, the recognition of the global slowdown recognize they have to put more investment now to those strategies.
Got it. Great. Jeremy, thank you very much for being with us this morning, and thank you all for watching. This has been the Economist Corporate Network. I'm Ross O'Brien. Have a good day.